Hey guys, Casey here. Welcome back to Lions Den Investments and Reviews. In today's video, I just wanted to talk about a few different things that were coming across my news feeds when it comes to the crypto market. And again, what I've been saying, you're gonna see a lot more positive news coming out here, and you'll also see some individuals come out and try to twist the narrative a little bit and make it very hard for you to kind of, you know, make a decision as to, okay, are we going up or are we going down? What the hell is going on? And with that said, I want to also talk about some technical analysis today on a project that I'm heavily invested in, which is Theta. So for all you guys that are invested in Theta, you're going to love this video because I've got some very good chart analysis to show you on where we're heading with Theta. So with that said, let's get started here. Uh, I ran across this article and I wanted to share this with you because this just proves again, it gives more confirmation as to what I've been saying all along. And if you read into this title, you're gonna find a couple interesting things that Jamie Dimon is saying here. Um, and it's kind of along the lines of like looking at yourself in the mirror, like you're saying one thing, but you're doing something completely different. Okay, now, I'm not trying to speculate too much, but I can tell you, Jamie Dimon, being the head of J.P. Morgan there, he borrows money every day. Okay, so when he says here that you're a fool if you borrow to buy a Bitcoin, and that he wouldn't care if its price increased 10 times, okay, you're okay. Number one, you're not a fool. Okay, for if you want to borrow money to buy Bitcoin, you're not a fool. You know why? Because Jamie Dimon is doing that himself. That's what these guys do. They borrow money. You think they're taking money out of their own pocket and then going in and buying cryptos and making bets on it? Because I can tell you right now, what was Jamie Dimon saying back in 2018? Oh yeah, he was telling his employees that if you borrow money or if you invest in cryptos or something like that, um, and he found out about it, he would fire you. That's what he said. And here he is 2 years later, of course, changed his narrative, flipped the script, and basically became a pro crypto advocate. If you're not familiar with what JP Morgan has been doing, they've created a whole group now based around blockchain and digital assets with cryptos within the firm JP Morgan, okay? So he's very pro crypto, even though he's coming out here and he's saying you're a fool if you borrow if you borrow to buy Bitcoin. And then he goes on and says even further here, which I think he's kind of spilling the beans for us as to what his prediction is with the price of Bitcoin over the next 3 months, given that we got a blow off top that we're waiting for. He says he wouldn't care if its price increased 10 times. Gee, Jamie, what are you saying? Are you saying the Bitcoin's going to increase tenfold here? We're going to do a 10x here soon? If anybody's going to know, I mean, you're talking about insiders. This guy's one of them right here. So I find that very interesting that he said that, and it made the headlines here with a Market Business Insider. But that's just one article. Here's the other one that I just found. Um, the SEC's chair, Gary Gensler, signals potential support for futures-based Bitcoin ETF. Now, guys, if they've been trying to get a futures-based Bitcoin ETF approved for 3 or 4 years, okay, and every single time they turned it down, of course, because we didn't have regulation and clarity in the crypto space. But that is extremely positive news, and you saw Bitcoin make a move up from where we were just a couple days ago. If you look at the charts here, just a couple days ago, we were down here at like $40,000. Everybody was freaked out, panicked. Okay, and then that news came out that Gary Gensler was signaling support for a futures Bitcoin ETF. And that really sparked a pump in Bitcoin, and we broke the downward resistance. And I was expecting that we would bounce off of resistance, come lower here. So I was proven wrong by that. So, you know, hey, sometimes you're right, sometimes you're wrong. But I'll tell you what, guys, I would much rather be wrong about the prices going down than say be wrong about thinking the prices are going up and then we get crashed down. I would much rather be wrong and say, hey, I think the prices are going down and then we skyrocket. So, you know, that being that said, it's really interesting that um, all that happened on Friday, okay, because you had again the options expirations coming out through the futures market in Bitcoin, but they don't have an ETF yet. So if they were to get an ETF, guys, this is going to bring in trillions of dollars from traditional markets and retail investors in traditional markets so that they can get into the crypto space by buying an ETF. That will take the market cap for Bitcoin from 2 trillion. You could probably expect a market cap on Bitcoin of anywhere between $6 and $7 trillion just based off of a futures ETF being approved. So that brings me to this last piece here, which is, the SEC could approve Bitcoin futures ETF in October. This is a prediction from an analyst, okay? So I just take it with a grain of salt, but I find it very interesting that all these articles are coming out around the same time, and now they're even talking about dates for a futures ETF. So, needless to say, interesting news here. I'm not going to go through and read the articles for you and bore you with it, but if you like what you're seeing here, hit that like button. Subscribe to the channel as well, because another thing I'm going to do here moving forward is take you into technical analysis and break down where I see some of these projects going with price movements. Okay, because we are approaching the end of the bull run in cryptos here, and like I've said in my previous videos, it's very important to understand where the price is going. So I've got Theta pulled up right now, and I'm going to show you guys a couple things here on Theta that I just spotted over the previous few days. So I've got a daily chart pulled up, and if you look at the 0.786 and the 0.618 from the Fibonacci levels, okay, I went ahead and drew those out for you here. So if you just went like down here from the bottom to the top, right, you can see I've got the 0.618 and the 0.786, okay? So just to let you know, that's what those two green lines are right there. Those are major reaction levels for price movement based on buyers and sellers within a market on assets. So if we go here, we had a downtrend, okay? We had a downtrend going, and then we also had support, strong level of support, like right around here. So you had a descending triangle, right? Now what happened is, if you look at Elliott wave, you've got, let me go find it here real quick for you. When you look at Elliott waves, you've got in a surge upwards in price, you'll have 5 different impulses, okay? Three legs up basically and 2 legs down. But if you look back here when at the beginning of December, this is when the bull market started, and then here's the end of December that I've got marked for the end of the bull off top. So if you look at the 1, 2, 3, 4, 5 Elliott wave, you've got a move up here. Okay, that's 1. Then you go down here to 2, and you could spot a third leg right here, but you don't want to do that, because if you look at the height of leg 1, leg 3 is always going to dwarf that in size, okay, and it must do that just from Elliott wave 3. So I'm going to mark 3 up here, because then we came down for 4, and then we topped out on 5. Okay, so that's your impulse wave for the surge up on Theta. Now if you look at the ABC correction, okay, you go from here down to there, that's A, and then you could go B, and then if you wanted to, you pull it down here to C. That's one way you could do it. And the other thing that you could do, if you don't like the way that looks, you could take A down here and then move B over here, and then you've got ABC that way as well. So either one of those would work, but the reason why I'm drawing that out for you is because if you look at where we're at right now, okay, we've got leg 1, right here, and then leg 2 down there. Okay. Now, with that being said, look at what formed here. We've got a inverse head and shoulders on the daily, and if you move out to longer time frames like the daily and weekly charts, that is extremely strong confirmation for a reversal in the trend when it comes to the price movement. So when you see inverse heads and shoulders like this, the patterns form out like this, guys, your price is going to basically reverse for, especially when you're going back to May 20th all the way to now, which is September 29th. You're looking at time frames here of at least 3 months where you're going to get a reversal in price action. Okay, and this is strong confirmation of that. So that was the first thing I saw. The other interesting thing that I want to show you and point out to you is if we get rid of, well, we won't get rid of the 1, 2, 3, 4, 5 yet. We're not going to get rid of that. But I want to show you, if you go to the trend-based Fibonacci extension, okay? If you go from up here to leg 1 and then down on the first move up that we had here back in December time frame all the way to like March, April, when everybody made their money on Theta, you can see here on leg 3, okay, I've got the Fibonacci levels for basing your targets on where price action can go. So you got 1.618 level, the 2.618, 3.618, and the 4.618, and so forth, so on. Well, look where leg 3 took us. Leg 3 took us way past 2.618. Okay? Now you could even take this back further if you wanted to, and we can go back here and look at, without a whole lot of data being pulled here on Theta, just because we haven't had a whole lot of will cycles yet. I can pull you back to here, and we could do something similar back here, where this was back on May 20th of 2020. Okay, you could do something similar and draw it out. But the reason why I'm showing you this is because look at, when I talk about reaction levels, look at what happened back here. Okay, we came down, we retraced, and we got into these buy zones right in here, and then we peaked out. We came up into the close to the 1.618, reverted back, we bounced off the 0.618 right back here, and then we shot up again. And what did we do? We cleared the 1.618 Fibonacci level. So what I'm trying to tell you is, if you fast forward and you move forward here, you should at least, when you're looking at your targets for where we're about to go on Theta, we should at least hit a 1.618. Okay, we're going to have to. That's a must, especially when you're looking at well cycles. This just proves it for you. So if we go back over here to leg 3, this was leg 3 right over here on the first surge up. We went past the 2.618 mark. Now the reason why I'm showing you that, again, is because if we go back over here and we do the same thing, and we do this trend reversal, okay, so here's leg 1 on up to leg 1, because we finished the ABC. Take that down to the retracement on leg 2, and then we're going to shoot off into leg 3. Now this is the last leg of the entire well cycle. So this last leg up is leg 5 of the entire well cycle. But within this leg 5 is going to be a 1, 2, 3, 4, 5. And so this is why I'm showing you this, because again, we got the 1.618 and the 2.618. So if we just draw it out and we base this on what we did back there that on that last previous run that I showed you, well, leg 3 ran up over 2.618, okay, and that would put us at a price anywhere between, like, I'd say 23.50 all the way up to where I've got the first target there, and I believe that's like, we'll look at it here in a minute. It's like 24.76 or something like that. But I think this will take us from leg 3 down here, and we'll rebalance or retest the 2.618 level on the leg 4. Okay, and then leg 5, would take us on up into new levels here of price discovery. Okay, and leg 5, guys, leg 5 could be super parabolic, just like what we saw back here. Look at leg 5 on that last wave. Like, we cleared the 5.618 really easy. So we could, by all means, if this thing goes super parabolic and we get a lot of price action, Theta could very easily go past that 5.618 level, all right, which would put it at around like $39, $40. There's a lot of insiders. I was reading some articles the other day that are saying insider traders on Theta and stuff like that were saying that they have price targets on Theta of somewhere around like $40. Well, I'm giving you the technical analysis of where they're getting that. Okay, so if you want to know, kind of how to base your targets, I can tell you right now, we're definitely going to have to hit that 1.618, which is right there around 1457. And leg 3 always happened to be longer than leg 1. Okay, it always needs to be longer than leg 1. You know, you're going to have, even if you went to the 1.618, well, and that's where you end, then that's not really a leg 3 because it's not long enough, right? It needs to be longer than that. So I could definitely see us on leg 3 here on this next move up, hitting, $20, $22, $24. We'll just have to wait and see because nobody can guarantee like where these prices are going to go and how parabolic they're going to be. But you can get an idea kind of where things are going. And not to mention, you got more confirmation with this inverse head and shoulders. Okay. So I just want to show you that and just show you how you can use Fibonacci levels using the 1.618, 2.618. And you can see, like, even if we go back here, right? Look, on leg 3, when we came back down, we came back down and we barely just crossed below this 2.618 level. And then what we do? We spiked higher. And we went all the way past the 5.618. Look right in here. On the leg 2, we came down here to the buy zone. But where'd we peak out on leg 1? Like if you look at leg 1, where'd we peak out? We peaked out right there at that 0.382. So, as a trader, if you're looking at shorter time frames, if you're looking at 0.382 is a big target for when prices are going up for day traders. So they'll buy down at the bottom like this, and then they'll place their targets. Normally it'll be like the 382 and then the 0.618. Well, you can see we came up like that, and we got to that 382 level, and then came back down and retraced back into a buy zone. But I just wanted to show you that because, again, we passed through the 786 level, which is a major reaction level. And as soon as we did that, we headed higher right over here on leg 3, and we retraced, came back down. Where'd we hit? Off the 0.618. Okay? You're going to see this quite a bit when you use Fibonacci levels. It'll always revert back to like 0.618. 786 is a big one. On the shorter time frames with prices moving up, you might see it hit that 0.382 and then come back. But those are key reaction levels and price to pay attention to. So I just wanted to share that with you and show you Theta today and where I think we're going over the next 3 months, because this is it, guys, and I've got massive bags. Theta and T-Fuel are two of my largest holdings when it comes to cryptos in my portfolio. So I just wanted to share that with you because I know there's a lot of people here that follow my channel that are invested in Theta, and I don't know if any of you guys have price targets yet on where you're going to liquidate, or some people are just saying they're going to hodl. And here's the other thing I want to talk to you about when it comes to hodling or just holding on. It makes no sense for you to hold and watch your portfolio go up. Say like, if you got $10,000 in there and your portfolio goes up to 100 grand, it makes no sense to watch your portfolio go to 100 grand and we get a blow off top, and then you're still holding, okay? Because you're like, well, I'm a long-term investor, I'm just going to hold it for 2 years. It makes no sense for your portfolio to hit 100 grand because at the end of this cycle, it's been proven, you know, cycle after cycle after cycle when it comes to cryptos. It's been proven that Bitcoin is always going to have about an 85% drop. And then altcoins will have anywhere between like 85 to a 95% drop. It makes no sense to hold on to your cryptos and not lick your ice cream or liquidate, okay, with $100,000 in profit if you had 10,000 in there and let's say it 10x. It makes no sense just to hold on to it. You'd much rather, this is what I would do anyways, I would liquidate with 100 grand, wait for it to drop into the next year, which would be December of 2022, and then buy everything back up for pennies on the dollar, and your bags are going to be so much bigger so that you can play this whole next wealth cycle moving forward, and make, 1,000 times what you made previously in the last previous wealth cycle. So just a couple things that I want to share with you when it comes to hodling, because yes, when a new wealth cycle happens, when you get a new, let's say the Bitcoin halving, right? This next Bitcoin halving, yes, you're gonna want to hodl. You're gonna want to dollar cost average in, but there's gonna be a time that comes when prices get overextended, and you're gonna want to take your profits just like the smart money does. And so that's the way you want to play these cycles. You don't want to just sit there and hold on to it for 4 years, and then, at the end of 4 years, you're sitting there going, well, I made a lot of money, but I'm going to continue holding because I think it's going to go higher over the next 4 years. When you could just liquidate, make your profits, wait for it to come down for a year because you know it's going to come down, and then buy on the bottom. And the thing is, these wealth cycles are predictable based on the protocol and algorithms within Bitcoin. So it's guaranteed. That's the beautiful thing about this, guys. Not to mention, it's not like stocks, okay, where you try to study a wealth cycle on stocks. It's not transparent. You can't see the data that the guys on Wall Street can see. I mean, to a certain degree you can, but with cryptos and blockchain, you can look at the cash inflows and outflows that are coming in and off the network, which is completely, that basically completely changes the ball game for you and puts the odds in your favor. So that alone right there is enough for me to continue playing in the blockchain space and the cryptos, because stocks, quite frankly, are just, they're not going to give you the returns that you're going to get here, and they're not as predictable when it comes to timing some of the markets on longer time frames. And so with that said, guys, that's really all I have for today's video. If you're liking the content, hit that subscribe button, hit the like button as well. I'll be back here next week. We'll cover some more stuff. I'll go over, more news that's coming out that just confirms what I've been telling you about these big institutions wanting to hype up the market and change the narrative so it's more positive. That way they can get the FOMO retail investors in, and then, do what they're going to do, which is the same game that I'm playing. So anyways, hope you guys have a great day. With that said, markets are volatile. So if you see any FUD, don't pay attention to it, because at this point, it really doesn't matter, okay? I will talk to you guys later.